Headed to SoFi Stadium? Ride the Culver City Bus Line 99, the SoFi Express. Just $2 base fare for a round trip from Westfield, Culver City on weekend game days. We're hiring too. Learn more at culvercitybus.com or call 310-253-6500.
Good afternoon. We're getting right down to business here, doing it live, doing more at 4 weekday afternoons right after Guy Benson and just before the 790 KBC News Blitz with Randy Wang at 5. And I'll be back at 6 tonight with top-ranked money manager Ken Winans on Winning with Winans here in 790 KBC. Right now it's Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com. And, of course, the on-demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, and all of your favorite podcast platforms. Stocks have kicked off the week with gains. In fact, the NASDAQ is taking the spotlight today, hitting an all-time high ahead of new inflation and job readings that could impact how fast the Fed lowers interest rates this year. The NASDAQ coming in for a closing gain of 98 points, good enough for a record-high close of 21,798. The S&P 500, which came off its record high on Friday after a disappointing jobs report, moved higher today of 14 points at 6,495, and it's just a whisker below its all-time high. The Dow, too, moving higher up 114 to 45,515. It, too, is just below its all-time high. Looks like the big news next week will be a possible interest rate cut, viewed as a virtual certainty at this point following the disappointing jobs report we got on Friday. Traders now see roughly a two-thirds probability that rates end the year at 3.5% to 3.75%, according to CME. Tech stocks climbed today with Uber and Broadcom gaining, and Verizon shares weighed on the Dow. AT&T and T-Mobile shares also dropped after EchoStar sold wireless airwaves in a $17 billion deal with SpaceX. EchoStar stock moved up nearly 20%, up $13.39 to $80.63 a share. Shares of EchoStar soared after the satellite and wireless company got a $17 billion deal to sell Spectrum licenses to Elon Musk's SpaceX, which is looking to enhance wireless coverage. Looking ahead now, the Labor Department's preliminary revisions to the jobs report due on Tuesday, followed by August producer and consumer inflation reports due on Wednesday and Thursday. Oil prices rallied today before cutting gains. The news here, the possibility of more sanctions on Russian oil outweighing OPEC Plus's plans to raise output further next month. Crude oil futures right now, we'll take a closer look at that, up 18 cents here at $62.44 a barrel. Bond yields down to, pulling back 4.04% for the yield on the 10-year note. That's the one that impacts the fixed-rate mortgage rates, and we'll be taking a closer look at that coming up later this hour with Jeff LAZERSON, the president of MortgageGrader.com, also Orange County Register real estate columnist. Another big story today that we've been following, 8Go Holdings, the ticker symbol in this one, OCTO, O-C-T-O. The stock surged nearly 3,000% today after the company announced plans to pursue a world coin treasury strategy. This is the latest public company to flip its balance sheet into a warehouse for digital currencies. The company announced it would sell $250 million worth of stock in a private placement transaction to buy up WorldCoin tokens. WorldCoin, by the way, is the token of the World Network, which was co-founded by Sam Altman. As part of this transaction, 8Go also named tech analyst Dan Ives as its board chair. Dan Ives has become one of the most prominent tech analysts on the street and a frequent guest on this program. He's an analyst with investment firm Wedbush, which happens to be based right here in the Los Angeles area, and he's scheduled to be on this program on Wednesday. Sunoco Products struck a deal to sell its ThermoSafe temperature-assured packaging business to private equity firm Arsenal Capital Partners, in a deal valued $725 million, as we see corporate merger activity picking up. Looks like delinquencies have shot past 5% for subprime car loans, according to recent reports from the Fed and Goldman Sachs, and that number surpasses the worst days of the 2008 financial crisis. We'll get an update on that and all things cars coming up later this hour with Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. But first on your money, the markets, the economy, and the whole works now. Joining me live, Ken Winans, President and Chief Investment Officer at Winans Investments, WINANSinvestments.com. Ken Winans, also a market historian and author of numerous books. His latest is Investment Atlas 3, also Forbes magazine contributor, so be sure to check out his latest article there. Most importantly, he's host of Winning with Winans, heard every Monday evening at 6 p.m. right here on your favorite station, 790 KBC. Ken Winans, good afternoon.
Hello, Frank. And you know what? I always enjoy listening to the list of things that you talk about. And, I'm sure the rest of the audience also picked on it too. There are deals all over the place. Corporate deals are happening nationwide, internationally. And one thing I would say was just a little article I read in the paper this weekend. It said there's a 23% increase in deal volume. And it's not just mega mergers, but it's also corporate breakups, certainly with what we saw last week with Kraft and Heinz. But when you hear about that, and you hear about that a lot of companies, record amounts of money being borrowed by American corporations, when you hear those two facts, and then you hear the news about the job market and all these other things, this is the September tug of war that we always have with the market. There's good news, there's bad news, and there's ugly news, and you have to kind of pick and choose what you want to buy into. But literally, here, I hate to say it, but this is the September that we know and love. If you've been in investing for a very long period of time, just a massive, volatile tug of war.
Ken Winans, President and Chief Investment Officer, Winans Investments, winansinvestments.com. It's always great to speak with you, Ken, and certainly there is tug of war going on between economists these days on how the economy is really doing after that jobs report came out on Friday. Now expectations that the Fed might do an even bigger cut, perhaps, or do more cuts down the line here. Give us your view of what's happening, given the cards on the table.
Well, here's the thing, and I'm going to be not to say devil's advocate here, but I am going to raise just a very simple point that I think anybody looking at overly fixated on jobs numbers, especially the economists, you have got to dissect the jobs market. And we knew that when DOGE was going into its round of cuts in the first part of this year, we know that government, both certainly federal, state, and local governments, are not hiring the way they were. They're laying people off. I bring it up with people. Look, I'm fine with having an honest talk about the job market, but if you are going to lump in government and private sector jobs all into one big clump, I think that you're going to find that it's going to be a very distorted picture. And it was funny today. I love to play around with Google's AI Assist. And for hypothetical, I asked it, if California was to remove the government side of the balance sheet out of the picture to look at what's really the economy, it's not the fourth largest economy in the world, Frank. It's the seventh. That's how much government is in the California economy just by itself. So again, I think that, look, the numbers were bad. There's no doubt about it. But as I've said many, many times on your show, be very careful about taking 1 month's worth of data sets and not looking at the revisions that will be coming up in just a few short weeks.
See you tonight. Read about it tomorrow, but hear it now on Mottek On Money on 790 KABC. On the air live with Ken Winans. And Ken, we see the NASDAQ at a record high today, as we've discussed in the past. The stock market's a forward-looking mechanism here. The tech stocks have rallied again, although NVIDIA, the Magnificent One, was up slightly today, well below its all-time high, up $1.29 to $168 and change. And some of the other big tech names pulled back here. What's your reaction to the tech names leading the charge here in anticipation of lower interest rates?
Well, here's the thing. I think that a lot of people in the show, we've talked forever about the Magnificent Seven, but, quite frankly, I would take a good look at some of the other very, amazing tech stocks, things like Netflix or Spotify or Palantir, or for that matter, you mentioned earlier about Broadcom, which is another play in AI. I think that you want to look for the names that just don't roll off people's tongues nearly as much as the Magnificent Seven, because when you look at the performance of those four stocks I just gave you, and you compare it to Amazon or Apple, you're going to realize that there are good tech stocks out there that just don't get the same radar coverage as some of these other names. But Frank, with that being said, and I've been saying it for quite a while, this has been and continues to be a stock pickers market, not an ETF market. And when I can find winners in almost any group you can come up with, and they range in everything. But the one thing they all have is extremely good businesses and ran by extremely good management. And I think that as we go into getting out of September, looking at traditionally fall is always a really good time to enter the stock market going into the winter, going into the spring. And I've been saying it for a while. People should get their list together of what they want to buy. And I still think with the fact that dollar's been very stable and actually moving up, the fact, we've talked a lot about gold, silver, and Bitcoin, which I know we'll talk about on the show. But the point is, there are good names you can own that are making money even within all this volatility, and people need to get their list together.
On there live with Ken Winans, and we will pick up anything we didn't talk about this time around on Winning with Winans at 6 o'clock this evening. But certainly gold getting a lot of attention, hitting all-time highs, and looks like gold futures just below $3,700 an ounce here at the moment. Silver just below $42 an ounce. And turning to so-called digital gold, we see Bitcoin well off its all-time high, but rebounding recently up around 112,300 or so. Ethereum moving higher as well, and Doge at 24 cents. What are your thoughts here on analog gold and the digital gold?
It's been interesting. I get a lot of people ask me about, especially in the case of the cryptos. And, they're still, Frank, you and I know it's a whole different language. You're talking about wallets and, which coins you want to use and all that other good stuff. But I am of the opinion that you are comfortable right now going into the ETF space with a lot of the cryptos. And the one that I like is the iShare Bitcoin, IBIT. It's up 20% on the year. As you said, Frank, things have pulled back off their highs. I don't see any problem at all for people who want to be in the space, especially, and by the way, that's not to mention, I've run into a lot of people, I don't know where they've been the last couple of years, but they've been asleep at the helm when it comes to gold and silver. I just think that if you want to be successful going into the market, even this next rung in the ladder, you have got to seriously consider having exposure to gold, silver, and I'm going to throw in there the iShare of Bitcoin. I think that you will not be disappointed with them as this rally continues. Again, the government is moving into crypto, whether you like it or not. That it's here to come. The Federal Reserve is doing more with it. China's buying more gold reserves. These are geopolitical movements that have nothing to do with what's just happening here. And I think you have to talk to your advisors to make the allocation shifts necessary.
Watching the movement in the price of oil today, which has mercifully been in the low 60s, around 62 and change here at the moment. Good news for consumers on the inflation front, as certainly not California, but the rest of the country enjoying relatively lower gas prices than we've seen in recent years. And by the way, beef prices through the roof now, the biggest increase ever. I think there was another report that came in recently, but inflation still a concern. The tariff situation is a concern too, Ken, and now the uncertainty here with this recent ruling, where the Treasury might have to unwind, may have to do refunds if this thing doesn't go through all the way. So there are definitely some wild cards on the table here.
Absolutely. Well, we knew that it's going to be a very fluid year, geopolitically, and certainly with even what we're trying to do. And certainly in this country alone with the terror situation. There was another article I read that talked about how even in Europe, Europe quintessentially, they want to put in new bureaucracies to handle all the new tariff rules with the United States. That's just the way they operate. But it takes time to put these things in place. And as you said, there's going to be legal challenges. We've seen them repeatedly, throughout this entire year on this stuff. I think that as an investor, you're just going to have to you're going to have to be able to pivot as things move along. And and I've said, don't this is not the market to own pet stocks in, or pet investments of any type. If they start performing badly, you need to get rid of them. But with that being said, there's an awful lot of things. Whether the tariffs are in or out, these companies have demonstrated the ability to navigate the world very cleanly, and those are things that you want to own.
All right, what about this one that made the splash today, up nearly 3,000%, this Octo? Quite a story here. And Dan Ives, who's been on this show quite a bit lately, will be on Wednesday, and we're going to talk to him about it. But this Eightco Holdings, Octo is the ticker symbol, up nearly 3,000% on the plans to pursue a world coin treasury strategy, as some other companies have. What should we know about this one?
Oh, boy. Well, this one in particular, but I'm going to talk about it in broader terms. There are going to be record, and I'm going to put, Frank, you know me, I'm not one to just throw it out there unless I really believe it. There are going to be record number of deals and IPOs that have anything to do with crypto or blockchain technologies. That stuff's going to be flying over the next 2 years. And the problem that most people have is that, A, even if you believe in it, you might not be able to get the shares in the deal unless you have a really cozy relationship with your investment firm, but B, it's very hard to predict when a firm's going to make these kind of announcements. I would just say this. Remember what happened to Ethereum. Ethereum lost 65% of its value because of a slight shift in what I understand is programming. This is not for everybody, and you want to be very careful when you hear about these big runs in things. You need to back off, talk to your advisors, and figure out a concerted game plan for you to be involved in this, because whether you like it or not, you're going to be involved in crypto, whether your bank's involved in it, your insurance company, or anything else you involve in the world financial system, you will have an involvement in it. It's best you learn about it now. But Frank, that's wild. 3,000% in a day. I mean, the only time I ever see moves like that is in the commodity world. And by the way, you talked about cattle. I went out this weekend and had some steak one of my nephew's birthday parties, and we went and had steak, and it was sticker shock when the bill came to the table on what that carne asada and that steak cost. I mean, it is unbelievable. Hopefully we'll start getting the herds up and cattle prices will begin to come down.
On there live with top-ranked money manager Ken Winans. And any specific places, Ken Winans, where you are putting money now and or taking it off the table?
Well, it's really funny. We rarely talk about it, but take a good look at the good old-fashioned banks. I mean, I'm absolutely shocked to see a stock like J.P. Morgan. It's up 22% a year. And by the way, it barely burped when the market blew up earlier this year. Or Bank of New York, it's up 35% on the year. I think, go back and look at some of the old guard, because they are doing very well in this market. Last but not least, I will just simply talk about the retailers. I've been in this business a long time, and I rarely see a fall going into Christmas, even in recessions, when retailers typically don't have a good run. And I find that a lot of people are very light on retailers. Even now, they're heavy in tech, but they're light on retail. I'm just thinking that you might want to check out stocks like TJX or Casey's General Stores, anything in the retail space. As we're going to the holidays, you want to have some money there.
And last but not least, we're going to talk mortgage rates coming up here very shortly with our mortgage and real estate expert. You too are a real estate expert and have your own index, right? And mortgage rates, the lowest we've seen in about a year here. Ken, what's your reaction to that big news here?
I just ran my numbers last week, and I was really surprised to see that there is, and I'm talking about nationwide, not just California, not just Las Vegas, but nationwide, there's an uptick in sales. You don't hear much about it, but even with the prices being as high as they are, the housing market is very mortgage rate sensitive right now. If mortgage rates move south at all and the banks don't become really tight on lending out money for new home purchases, I think that we can say that going into next year, the housing market will be better than this year. But it's all predicated on people. It's not rates coming down, Frank. It's that people have the ability to go get a loan. And so that by itself is going to predicate how housing goes going forward.
Ken Winans, President and Chief Investment Officer, Winans Investments at winansinvestments.com. Ken, thank you very much for taking the call here. Look forward to speaking with you at 6 o'clock on Winning with Winans, heard every Monday night at 6 p.m. right here on 790 KABC. Ken, thanks again, and look forward to continuing the conversation this evening.
Sounds good, Frank. Take care.
Thanks very much. And out to the freeways we go now, 790 KABC. Mottek On Money continues, 790 KABC. Good afternoon. NASDAQ at a record high today of 98 points, 21,798 to kick off the new week. The S&P 500 rebounding from Friday's sell-off off a record high of 14 today at 6,495. And the Dow rallying today of 114 points at 45,515. All the major averages at or near record highs. Octo taking the spotlight today, up $43.55 to $45 a share, up nearly 3,000%. EchoStar moving higher today on this deal with SpaceX, up nearly $14, up actually $13.39 at the close to $80.63, a gain of 20%. NVIDIA up $1.29 at $168 and change. Microsoft up more than $3 at $498 and change. Apple pulling back nearly $2 at $237.88. Strategy down nearly $6 at $329.90. Bitmine Immersion up $1.75 at $43.79. iBit, that's that Bitcoin ETF, up 28 cents at $63.70. Price of oil up 18 cents at $62.44. Checking the cryptos now, we see Bitcoin up nearly 300 at $112.354. Ethereum up 18 at 4,315. Doge now back up to 24 cents. Checking gold at or near all-time highs again today, pulling back about $3 here at the moment at $3,674.60 an ounce. Silver hovering just below $42 an ounce, and platinum up $1.10 at $1,386 and change. Broadcom shares participated in the rally today, up nearly $11 at $354 and change. Netflix up 94 cents at $1,244.76. Paramount Skydance shares up 19 cents at $15.19. Intel down 1 cent at $24.48. Tesla pulling into reverse today, down more than $4 at $346.40. Once again, the NASDAQ, the star of the day, hitting an all-time high, closing up 98 points at 21,798. The S&P 500 up 14 at 64.95, and the Dow gained 114 at 45,515. And now the latest news for you here on 790 KBC.
Headed to SoFi Stadium? Ride the Culver City Bus Line 99, the SoFi Express. Just $2 base fare for a round trip from Westfield, Culver City on weekend game days. We're hiring too. Learn more at culvercitybus.com or call 310-253-6500.
Hey Bruin fans, want to go behind the scenes with your favorite teams and athletes? How about getting exclusive merch and opportunities to enter sweepstakes like sideline access at the Rose Bowl? Introducing Blue and Gold Society, UCLA Athletics fan membership program created to support Bruin student athletes. Members receive benefits like exclusive gear, videos featuring insider stories, and incredible experiences courtesy of UCLA Athletics. Sign up today at blueandgoldsociety.com.
Actor Michael Rosenbaum, he knows some of the most talented people in the business.
And we try to bring you candid, open interviews, not just actor stuff. Julie Bowen is fantastic.
You know when you leave a job and you know you haven't done your very best job? I hate that feeling.
And if you're here for the wonderful Sarah Silverman, you came to the right place.
Comedy dies in the second guessing of your audience. You just have to keep writing what you think is funny right now.
The Inside of You podcast.
If you really love the podcast,
Follow and listen on your favorite platform.
follow us. It's free.
Mottek On Money continues, 790 KBC, a ray of sunshine in real estate as mortgage rates have hit the lowest we've seen in about a year. Suddenly, mortgage rates have dropped dramatically, in fact, moving to the lowest levels seen in nearly a full year. This after the disappointing August jobs report boosted bets that the Fed might be lowering short-term rates more than previously expected to goose the economy. We also saw the yield in the 10-year note, which impacts fixed-rate mortgage rates, pull back since Friday, now at 4.04%. And joining us live now is expert Jeff Lazerson, the president of MortgageGrader.com, an Orange County Register real estate columnist. Jeff, thank you very much for taking the call here. And how are the rates looking this afternoon?
Well, Frank, like you said, goosing the economy. I sure hope that's what happens. Rates are looking fabulous. The 30-year fix is at 5.75% at 1 point cost. That's up to $806,500. That's a Fannie Mae conforming loan limit. The 15-year fix is at 4.99%. If you go to the high balance loan, so that's $806,501 to $1,209,750 in LA and Orange County. The 30 years at 6.125%. The 15-year fix is at 5.375%. Government loans, FHA and VA, 5.25% at 1 point. And the jumbo loan, that's anything over $1,209,750. That's at 5.99% at 1 point.
All right, and the lowest in about a year, right? Where do you see the rates go from here?
Well, they're going to keep going down for a while, it looks like. I mean, I was just playing with some numbers. A couple months ago, I was quoting 6.5%, and the payment at 6.5% on $806,500, the conforming loan, was at $5,097 a month. And at 5.75% today, locally, you can get the payments at $4,706. So the payment's going down $391 a month in just a few months recently. And so I would expect rates will continue to drop. Next week the Fed will drop rates. I would bet a quarter. I don't think it's going to be more than a quarter, and I would bet that they'll drop it another quarter in October and another quarter in December. So we'll probably see 0.75% drops before the end of the year, which means the short-term money would be at about 6.75%. the 30-year fixed money, it isn't directly tied to the short-term money, but it follows it closely. So it looks like you're going to see fixed rates under 6% real soon. At least the Freddie Mac fixed rates are locally. Our rates always run about a 0.5 to 0.75% lower than the Freddie rates. And last week the Freddie rates were like in the 6.5% range. So we are looking really good.
And the expectations here with the Fed set to lower short-term rates by at least a 0.25 percentage point, maybe 0.5%. That's been talked about too, but the expectation widely is that it'll be a 0.25% rate. That's the one that impacts the adjustable rate mortgages, right? What are your thoughts on adjustables here now?
Well, some of the adjustables are amazingly low. I mean, you can do a 5.5% on a jumbo fixed locked in for 5 years, and that's pretty darn good. I mean, it's a good 0.5% lower than you could get if you got a jumbo fix. So not bad. Although if you think about the long term, you're 0.5 point isn't a big hedge, in order to guarantee a 30-year fix. So if you could get about a point spread on an adjustable loan compared to a fixed, then I'd say go adjustable. But if it's less than a point, I think the long-term guarantee, you're better off just taking the fixed rate. Unless, of course, you're only going to stay in the house for a few years, then go with the adjustable.
All right. So as this mortgage rate news got your phones ringing, are people looking to refi now? Has activity picked up? I know you tell it like it is here.
It's a little bit better, but it's still really new. All of this is brand new news, and it's just filtering through the public airways. And the real estate market is just kind of stuck right now. I talked to a lot of the realtors, and they're just stuck with listings, and they're not really moving. And so and then a lot of the buyers I talked to and borrowers on the refi side, they're saying, well, I'm going to do it, but let's just wait until the Fed, makes their move in a week, or then they might say, well, let's wait for another month or two when they make the next move. So people are getting, warmed up to it, but they're not, they're not just jumping in yet, because the anticipation, rightly so, is that rates are going to get a little bit better. And so, do you wait? Do you not wait? I'd say most people are going to wait a little bit longer, and the purchase money action isn't really, it's not going crazy right now either. So people are still in the wait and see mode.
See it tonight, read about it tomorrow, but hear it now on Mottek On Money, live on the air with Jeff LAZERSON, the president of MortgageGrader.com and Orange County Register real estate columnist. Who's buying these days, Jeff? There was a time when we had a lot of foreign buyers. Is that still happening now? And are people bailing? Obviously, a lot of concern about the entertainment industry now with TV and movie production slowing dramatically. Been hearing a lot about that, a lot of conversations over the weekend about that. What's going on the front lines here?
Well, the buyers, the foreign buyers, there are a lot of cash foreign buyers. 30 to 40% of all the Southern California transactions are cash, which is, that's a lot. And it's been consistently that way for the last year or two. So there's a lot of money out there, whether it's foreign or domestic money. There's a lot out there. I haven't really seen yet people, bailing on their houses. The good news for most people that might have to bail is they probably have a lot of equity built up, because the properties have appreciated so much over the last several years that they're not in a situation where they're underwater. So even if they had to take a little bit less than what they want, they could still move the property quickly. But so the good news is I'm not really hearing too much of that yet. And I say yet because it could happen. I just haven't heard it yet.
All right. What's your outlook for home prices? Based on that last report we talked about that came up about a week or so ago, that Case-Shiller report showing home price appreciation has cooled off and has actually turned negative in some places. What do you see ahead on the home price front?
Yeah, I think prices are getting really soft, Frank. They're going down, and the only thing that's going to counterbalance the softness in the prices, if rates come down, I would say they're going to have to come down to the low fives for a 30-year fix for a lot more people to jump back into the market. Prices are over the moon. Affordability is just so difficult. People are worn out. As far as other than cash buyers, the people that are able to buy are either move-up buyers that already have a lot of equity in their home or a lot of appreciation, or kids that are getting a lot of help from the family. They're getting co-signers and they're getting gift funds. But other than that, other people just can't afford the $6,000, $8,000, $10,000 a month house payment that it takes in Southern California.
What about condos? A lot of reports about what's happening in Florida with the high homeowner association dues and insurance there, and certainly here too, right? What about condos nowadays?
Condos are a slippery slope right now, Frank. They are really slippery because it's not just the insurance situation, but it's the deferred maintenance. Most of the condos were built 30, 40, 50 years ago, and they have that balcony law in California now where they have to do all the wood inspections, anything with a staircase over 3 units. It's really become a big deal with the deferred maintenance. And so people are getting stuck with these big penalties to, have to add to their association fees. So people are staying away from condos largely.
All right. What did you write about over the weekend and what's coming up?
Well, over last weekend, I talked about the exotic loan products, the 4 top exotic loan products that people were using. And this week, I'm going to talk about the interest rates and how you can calculate whether it's worthwhile to do a refinance or not. Let's say that you're in the 6 or 7% range. Is it worth it to do it now, or should you wait a month or two? So that's what I'm going to be going over this week.
Terrific, Jeff. Well, thank you very much for joining us live here this afternoon. Jeff LAZERSON, the president of MortgageGrader.com and Orange County Register, real estate columnist, part of the Southern California News Group. Jeff, thank you very much for joining us live here this afternoon.
Thanks for having me, Frank.
Right out to the freeways we go now on 790 KBC.
Headed to SoFi Stadium? Ride the Culver City Bus Line 99, the SoFi Express. Just $2 base fare for a round trip from Westfield, Culver City on weekend game days. We're hiring too. Learn more at culvercitybus.com or call 310-253-6500.
Bruin fans, fall is finally here. That means UCLA football is back in your life. Head out to the Rose Bowl to enjoy America's best tailgating and to make more unforgettable memories with the Bruins. Nico Iamaleava and the Bruins are ready to make an impact this year, and we need you cheering them at the Rose Bowl. Visit UCLABruins.com or call 310-UCLA-WIN to lock in your tickets today. 310-UCLA-WIN.
Actor Michael Rosenbaum, he knows some of the most talented people in the business, and now he's getting the inside story.
Talking with Josh Duhamel. Did you ever suffer with anxiety?
I would put tremendous pressure on myself to deliver, because if I didn't know what else I was going to do.
David Tennant. If you could do Hamlet, nothing should make you nervous.
I was on the floor of my dressing room in the fetal position.
I've been there.
The Inside of You podcast.
I hope you enjoy the podcast. We talk about mental health and life and all that stuff. Thanks for being here.
Follow and listen on your favorite platform.
Mottek On Money continues here at 790 KABC. Borrowing costs in the news, as we just heard a moment ago, as far as real estate is concerned, but also in the car business. Turns out delinquencies have shot past 5% when it comes to subprime auto loans. Those reports from the Fed as well as Goldman Sachs recently, that looks like the worst, even worse than the worst days of the 2008 financial crisis. A lot of interesting things happening in the car business. It looks like some places are ditching electric buses for diesel buses once again. Let's get a comprehensive update now, as we do frequently, from Lauren Fix, Editor-in-Chief of Car Coach and the co-host of the Total Car Score podcast. Lauren, thank you very much for taking the call here this afternoon.
Yeah, there's a lot going on in the auto industry. It's funny, in the last few years, it's been crazy. One of the things was the huge investment of your tax dollars into electric school buses. And although it sounded great on the surface, and Kamala Harris came out and said she loved the yellow school bus. I don't know if she ever rode on one because she went to private school. But for the most of us that did ride on the yellow bus, they were diesel. And so what's happened over this period of time, there was a forced demand for school districts to buy into this. And what's interesting, this $159 million electric school bus gamble is a total failure. Many districts have already converted back to diesel vehicles because it's a fraction of the price. They could buy 6 of them, 6 diesel school buses for the price of 1 electric school bus, which takes too much time to charge. But at the center of all this, which is really interesting, is a company called Lion Electric, like the animal lion. It's a Canadian company, and why they got this contract, I don't know. And what's interesting is they took our tax dollars and gave it to a Canadian company. I'm sure there's someone in the United States who could have built these buses, but that company is now officially out of business. So back in 2002, they pushed for the electrification. Biden gave $159 million to produce 435 electric school buses, which means each school bus was about $600,000 each, which is a lot of money for a school bus when they cost only a fraction of that. But they were the 3rd largest recipient of your U.S. tax dollars. There was other bus companies, of which most of them have gone out of business. They called it the Clean School Bus Program. So anyway, the value of this company, once they received this contract, was $5 billion. And then they had supply chain problems, battery problems. They were unable to get the batteries to hold a charge because the heavier the vehicle, the more battery you would need, which made the vehicles heavier, and it was wearing down tires prematurely. And now there's a bunch of school buses that are here in the United States and school districts where they can't get parts, they can't get charging, they can't get support. And now they've got a bunch of vehicles that are basically just sitting, and those school districts have decided to go back to diesel power. They're all over the country, from Michigan to California to New York to Ohio. So the entire country is finding themselves in a tough position, especially with weather. So when you think about California, you think LA, that shouldn't be difficult. But when you think about other areas in the state of California, especially when you're going further out of the main cities, the charging wouldn't be sufficient enough to drop the students off, get it charged up by the afternoon to get them home. So that was a huge problem.
Absolutely. You did a great job on your Car Coach Report on that on your YouTube channel. We're on the air live with Lauren Fix, Editor-in-Chief of Car Coach Reports and the co-host of the Total Car Score podcast. Maybe we'll see the old Crown buses here come back to life here in the Los Angeles area. I guess they've updated the fleet here. Looks still mostly diesel here, but looks like the very old Crown buses that we used to see on the road here for decades have been retired. The old ones anyway. Now, what about what's happening on the self-driving front? Are we going to be seeing more self-driving cars around? It's still a novelty to see the Waymos here in the Los Angeles area. Everybody points them out. Are we going to see more self-driving vehicles in the near future?
Well, it's interesting. Since we spoke last, Tesla has decided to make a big change. They were calling their full self-driving, which they were calling it. They're now changing what that definition is. Even though they promised to have full autonomous cars, they've changed the meaning of full self-driving of FSD to its original promise that the driver must pay attention and be fully engaged at all times because of a very large lawsuit. So while we think that Waymo, which has got Lucid partnered in with them now, the biggest issue that we're seeing is the fact that there's still a lot of issues. You cannot drive it in the bad weather when it's raining heavily. If it's very light drops outside, it should be okay. They won't go on highways, and it won't go in certain areas that are congested. So before you say, yes, I'm going to opt for the self-driving version, it's probably going to be during the middle of the day when traffic is light, when traffic is heavy. Autonomous cars don't do well. They get confused because humans are involved in the other vehicles. So while this all sounds great, we still have a lot of hurdles, still no government regulations. The insurance companies don't like this at all, though you think they would. But the problem is who's at fault. And of course, the insurance company will say it's the car manufacturer, it's a software company, it's the person behind the wheel, the company who owns them. So this opens up just more legal issues. We've got weather issues, and we still, to this day, have no way to stop hackers from accessing the system. So once these vehicles are running autonomously and there's a network, that network can be hacked from literally anywhere. And until the government can keep themselves from getting hacked, they probably shouldn't be telling people these are super simple and safe. And we're going to find this with robo-taxis as well. Every single brand does not have a permanent solid firewall that protects you in those vehicles. So be aware, if you want to take one for a ride, it's an interesting experience. But remember that if it starts raining, it will pull over and have you wait for a human manned driver to pick you up because it cannot drive in bad weather.
Isn't that something? You did a great job with your op-ed and for Newsmax.com, focused on car prices, asking are cheaper cars ahead? U.S.-EU trade deal could change everything. What about car prices and with the tariff situation? And also, as I started out by saying, nervous time for a lot of subprime auto borrowers with defaults rising significantly. What do you see ahead on the auto loan front as well?
Okay, as far as the EU making a deal with the U.S., if that works, and I don't know, we're not there yet because we have to be on the same safety standards, and they have the Euro 7 standard, and we have different EPA standards. If we can get on the same page, cars will get cheaper because one vehicle would be made on a global basis, which would be fantastic for consumers. We're not there. I am monitoring it, and as things start to unfold, I will report on it. But one thing I want everyone to be aware of, there's some deals going on by the end of September, that electric vehicle mandate, that money goes away for the $7,500 tax credit. So if you want an electric vehicle, you can place an order for one and take delivery post the end of the month, but you have to have a contract in place. Also, be very, very careful of these 84-month car loans. They sound fantastic, and you think, well, it makes a brand new vehicle affordable to me. You will find yourself in a bad position financially, which means you will owe more on the vehicle after 3 to 5 years, and you're only paying interest for the first part. So from a financial standpoint, and I'm sure you cover this on a regular basis, it makes more sense to, if you can't afford the car, look at a certified pre-owned, go with a 5-year loan. Anything beyond that, you're outside the warranty for every vehicle except for Kia and Hyundai and Genesis.
Terrific, Lauren. Thank you very much for that comprehensive update. Lauren Fix, editor-in-chief of Car Coach Reports and the co-host of the Total Car Score podcast, live with us here on Mottek On Money on 790 KABC.
Headed to SoFi Stadium? Ride the Culver City Bus Line 99, the SoFi Express. Just $2 base fare for a round trip from Westfield, Culver City on weekend game days. We're hiring too. Learn more at culvercitybus.com or call 310-253-6500.